Welcome to the show. Today, we're going to talk a little bit about credit and part two of credit. Last episode, we told you a little bit about how a credit score, good, bad, or ugly, can save you or cost you thousands of dollars on your mortgage. Well, today we're going to talk a little bit about how your credit score is decided, and if you've had a credit bump or a credit bruise or know somebody that has, how you can fix your credit report as quickly as possible. So first thing you have to know is that a healthy credit score is going to be somewhere above 650, 680 towards 700. Ideally, you want to keep it above 700. The range goes from 300 to 900. 900 is what we call the credit unicorn. That means somebody that has absolute perfect credit without a flaw on it. Closest I've seen is 857. So if you've got a 900 credit score, love you, congratulations. You should be telling others how you got there. First thing we got to look at with credit is how it is decided. And there's two organizations in Canada that look after and monitor credit. That is TransUnion and Equifax. I have no idea how their secret sauce works. I've talked to the Equifax reps. They're not really sure. It's an algorithm that tracks everything for you on your behalf. So when it comes to your credit, when the credit agencies are monitoring, the utilization and a couple of different factors come into play. There's really about 5 different ways they calculate their credit score. First thing they look at is your payment history. Are you paying on time every time? And if you're not, it will affect your credit score negatively. Are your payment history, or sorry, your utilization? How much credit do you have and how much are you using? So for example, if you have a $10,000 line of credit and you've got $9,000 balance on it, that's a 90% utilization. That will affect your credit score negatively. Ideally, they want to keep the credit scores below 40%. If you can keep your utilization below 40%, your credit score goes up. The third thing they look at is the type of credit used, whether it's secured lines of credit or secured debts against your home, whether it's credit cards, auto loans, all of those are calculated in a different manner, and they play a role in deciding your credit score. The fourth one is the length of your credit history. To have a positive credit score and to keep it healthy, you have to have at least 2 lines of credit open for at least 2 years. So if you've got junior folks in your family that are just starting to build a credit line or credit report, you want to try and get them 2 lines of credit and have it open for at least 2 years. That's what lenders are looking for in the best case scenario. And hopefully, if you've got young people that are watching, you can coach them how to keep their credit score healthy as they move into the game of money and move into the world of money as they get older as adults. The last thing they look at is new credit. How much new credit are you searching for? Are you going out and constantly making inquiries about credit? Are you shopping for loans? Are you shopping for credit cards? Because every time you go to a bank or a credit card company to pull your credit report or to apply, they pull your credit report. So every time someone pulls your credit report, it can have a negative effect on your score. In the mortgage world, if we pull your credit report, it's what's called a soft pull, and it doesn't affect your credit report. Ideally, though, you don't want to have that happen 20 or 30 times. So if you've got someone that's in a bad credit situation or they've had negative credit, what's the best way to increase credit fast? There's 3 things you can do very quickly. The first thing is correct any errors on your credit report. You can request your credit report from Equifax or TransUnion, go through it. You can actually go through it with a TransUnion or Equifax rep, make sure there's no errors. If there are errors, for example, someone has taken out a phone on your line of credit or taken out a credit card in your name, get it taken off your credit report right away. You can request that. That will help increase your score. So first thing, correct errors. Second thing, utilization, because utilization is about 30% of your credit score. So if you've got, let's say you've got a credit card that's at $5,000 and you've used it to $4,000, call and request a credit increase as much as they'll give you. Okay, now don't spend that money, but if your credit goes up, if they give you a $10,000 increase up to $10,000, now your utilization is at 40%, your credit score goes up. I know it's totally counterproductive to the way people that are struggling with credit should work, but that's how it works. So you want to get your utilization number lower. And the third thing you can do is pay your bills on time every time. I don't care if the minimum payment is $8, pay it on the day it's due or the day before, or better. Best thing you can do is automate your payments out, because if you're paying on time every time with your bare minimum payments, that gets your credit score up as well too. So the goal, of course, is to get to a position in a place where you're using your credit on a regular basis and you're paying it off monthly, so that you're not holding a balance and you're actually working in a positive cash flow situation. So those are a couple of things you can do for your credit score right away. So if you've got questions about credit, of course, you can always reach out and talk to me. There's a lot more in the world of credit we can discuss and how things can go. Also, so if you've got questions, give me a shout. Next thing too, by the way, thank you. Sorry, dog, my apologies. Next episode, what I'd like you to join us for coming up on Wednesday, we're going to talk about the first-time home buyers incentive. So if you've got somebody in your family that's a first-time home buyer, the government has a program that's available to them. It does have some terms and conditions. We'll go through what first-time home buyers have to go through. We'll talk a little bit about down payment. We'll talk about the government program and things you should look out for if you're a first-time home buyer. So thanks for joining us on the Mortgage and Money Morning Show. We'll see you next time for the First Time Home Buyers.